WTF? What the feck? What is the crack? Welcome to the channel. What's going on there? Bitcoin rallied up like 20% last week. This week, 20% we got, and now we're gone down 6% in a couple of hours. What the hell is going on? Let me have a sit down here and we'll talk to you. Oh yeah. Oh, just back from the old gym. Had a workout. What's the crack? Don't forget to daily exercise. Hit the like button, like, subscribe, become part of the channel. Look at the car, it looks so nice in the sun. Check out that for an evening. Beautiful evening here. Oh yeah. So, Bitcoin, WTF. What's going on? Well, you see the whole market, Bitcoin's market now, it's reached a critical mass size that Wall Street are involved. They're involved with all their shenanigans and their games, and we wanted them in to pump up the asset, but it comes as a cost, and we get these shenanigans. But CPI figures came out, Consumer Price Index inflation, okay, from stateside, and everything that happens over there dictates the Bitcoin market because it's the largest economy in the world. And inflation, CPI inflation went up, and that's bad because the Federal Reserve thought they had a handle on inflation, and now it's after going up another little bit. Now it was only 0.01%, okay, but it was still an increase in consumer price inflation. So things like risk assets don't like that, because what risk assets love, what Bitcoin loves, is money printing. Bitcoin is a hedge on money printing, and when inflation's going up, the Federal Reserve can't print money because they're trying to curb inflation. They basically want to bankrupt you. Well, maybe not you, but they need to bankrupt a lot of people. A lot of people need to lose their homes and default on mortgages, so that they can destroy some currency and, you know, cause a bit of deflation to get rid of this inflation. So people need to get bankrupted, and companies need to go out of business, and that's how we solve inflation. And it always goes in these boom and bust cycles. So that's what's affecting Bitcoin at the moment. Now, what I say to people is, how I navigate this is, don't think in the short term. Short term thinking is, I need to buy Bitcoin today, and I need to get rich tomorrow, and it'll be all good, and I'll be like those other Bitcoin lads. It's so easy, this is. But in reality, anyone who's served the term here, who's been here for a while, you'll realize that it's not simple, it's not easy, and anyone who's had any sorts of success investing into these markets, you know, has had strategy or a lot of luck. Some people just have a lot of luck, okay, but most people who rely on luck eventually lose their money. But most people use a strategy, and they have to go through volatility, which means, you know, they invest some money and then it's worth less, and then it's worth more, and then it's worth less, okay. So that is just the terms of being here and going through that volatility. So what I say is, zoom out. In Bitcoin with Dinny, we teach people to think in the medium term. We call it a pension, plan B pension. You know, so we're talking 4 years, 8 years, 10 years, 15 years, 30 years. Some of our clients are in their 20s. You know, we're literally talking 30 years. Now, they probably won't have to wait 30 years to retire. But, you know, some of them might enjoy being entrepreneurs and doing stuff, so they might want to. But, you know, we're talking longer term stuff. So volatility is the price we pay for performance. It's the price we pay for being in this asset class. Anyone who buys Bitcoin, you're going to see your money trade down. If you want to see it trade up, you got to be prepared to see it trade down, and you don't want to be squeezed out of your position. So that's why when you have a plan and a strategy, and you separate your spending money, which is like your living expenses and your mortgage payments, and if your car needs a clutch or a new battery, who knows how them electric yokes are going to work out, all right? But if your car needs a car or a battery, if your car needs a battery or anything like that, you know, you separate that money from your investing money. Is totally different. You build up your security bucket, we call it. In the Retire Early Club, we teach all this. So if you don't know how to invest or where to start, check out Retire Early Club on our website, CryptoWithDinny.com. I don't think the Bitcoin with Dinny link works yet. But we teach you how to, you know, how to basically become an investor. Build a security bucket, build a traditional investing bucket, and then build a digital asset bucket. So you separate your money. So it doesn't matter. You know, your investing money is money that you didn't need for a decade anyway. Okay, so you're prepared to park it and allow it to suffer the volatility, because volatility is the price paid for performance. And if you want something to go up a lot, well, you're probably going to have to experience a bit of downtime. So yeah, my advice is zoom out. Don't focus on the short term. Obviously, it's difficult if you're trying to get your position and you're trying to find the bottom of the market. But again, my advice is, you don't need to find the bottom. No one says you buy the bottom and sell the top. No. Successful investors buy low, sell high. We're low, lads. We were nearly 70k. We're 20k today. I think it's pretty low. Okay, In hindsight, it's not going to matter. When Bitcoin's trading at $1 million per coin, is it going to matter if you bought it at 20k or 17? Is it going to matter? Is it? Come on, don't be silly. Bitcoin can't make it to $1 million, can it? Depends how long you can live. Maybe it won't take that long, but maybe it'll take a while. But maybe it won't, who knows. Anyway, I'm only having the crack. Right, I'm going to jump off. Don't get squeezed out of your position. Enjoy the volatility. Remember, it's a buyer's market, so we love when the price corrects. If you're thinking in Bitcoin terms, or crypto, if you're buying other assets, fair enough. But if you're thinking in asset terms rather than fiat, remember cash is trash. It goes down in value. So if you're thinking in cash terms and you're using that as a measuring stick, okay, I'll give you a little Dinny bomb here, since you're on. I'll drop a little Dinny bomb. People use euros or pound sterling or dollars to measure their wealth, to measure their success, to measure their prosperity. It's a terrible measuring stick, okay? Take a centimetre. In 100 years, a centimetre will still be the same length. It'll be still the same unit. Everyone realises that. What about a kilogram? In 100 years or 10 years or 5 years, whatever, a kilogram is still the same weight, correct? Yeah. So that's a good measurement tool. Okay, it's a good unit of account to measure and quantify weight or quantify distance. All right, but what about a euro? Tomorrow, a euro isn't the same as a euro is today. In 5 years, it definitely isn't the same. But yeah, we use these things. But like what I try and communicate and teach people when I'm building plans with them is think in asset terms. Don't think in fiat. You're brainwashed into thinking in fiat. School teaches you to think in fiat. You need to unlearn all that crap. All right, that's taught you how to be poor. That's why you're stuck in the system. You need to think in asset terms. Okay, not in local fiat, think in asset terms, okay? And then you're in asset accumulation mode. So then when assets crash and correct, you're happy. You love that. That's an opportunity, all right? It's not a bad thing. It's a really good thing. So it's the opposite to how you think you should think, is how you need to think. And that's why most people are really bad investors. Anyway, little Dinny bomb, hit the like button. It's great to see us here, guys. Thanks for being here. All you got to do is touch the screen and then press the little like button, and you can even yeah, I'm in Tenerife. I'm in Tenor Rush, Scotty. Take care, guys. Dinny out.